Why America is great. World's largest economy when we examine the global economic landscape of 2025. One nation stands distinctly above all others, the United States of America, with a gross domestic product exceeding $30 trillion. America commands more than a quarter of the world's entire economic output. This economic dominance is not merely a matter of statistics or bragging rights. It represents a complex system of innovation, entrepreneurship, financial infrastructure, and institutional strength that has profound implications for global prosperity, technological advancement, and international stability. Understanding why America maintains the world's largest economy requires us to look beyond simple numbers. It demands that we examine the foundations of this economic power, the mechanisms that sustain it, the challenges it faces, and what this dominance means for the global community. This examination reveals a story of resilience, adaptability, and continuous transformation that has characterized the American economy for over a century. The scale of American economic power. As of 2025, the United States economy has reached a nominal GDP of over $30 trillion. To put this in perspective, this figure exceeds the combined economic output of the next two largest economies. China, the second largest economy, has a GDP of approximately $19.23 trillion. Germany ranks third at around $4.5 trillion, followed by Japan at approximately $4.1 trillion. The United States alone accounts for roughly 26.2% of global GDP in nominal terms and 14.8% in purchasing power parity terms. This economic scale translates into tangible global influence. The American economy generates more economic activity than the entire European Union combined. It produces more goods and services than all of Africa, South America, and Australia together. This extraordinary productive capacity stems from a combination of factors including population size, technological advancement, capital accumulation, and institutional frameworks that encourage economic activity. Recent economic performance demonstrates the resilience of this economic giant. In the third quarter of 2025, real GDP jumped by an annualized 4.3%, building on a solid 3.8% increase in the previous quarter. This impressive momentum was fueled by resilient consumer spending, improved trade dynamics, continued robust investment by businesses in artificial intelligence technologies, and rebounding government outlays. Consumer spending, which represents approximately 70% of American GDP, expanded at a robust annualized rate of 3.5% in the third quarter, contributing 2.4 percentage points to overall GDP growth. Over the past quarter century, the United States has demonstrated consistent economic expansion. Real GDP has grown nearly 70% since 2000 in inflation-adjusted terms. The average annual growth rate of 2.1% may seem modest, but it represents the third fastest growth rate among the 10 largest economies today and is particularly impressive for an already mature, developed economy of this scale. Historical context and sustained dominance. The United States has maintained its position as the world's largest economy continuously since the end of World War II. This sustained dominance across multiple decades and through various economic cycles represents an extraordinary achievement in economic history. Since 1980, American GDP has risen from approximately $2.9 trillion to over $30 trillion in 2025. Reflecting more than tenfold growth over this period. This long-term dominance reflects several enduring advantages. The American economy has demonstrated remarkable adaptability through major structural transformations. It successfully transitioned from a primarily agricultural economy in the 19th century to an industrial powerhouse in the early 20th century, then to a service-based economy in the late 20th century, and now to an innovation and technology-driven economy in the 21st century. Each transition required massive reallocation of resources, labor, and capital. Yet the economy not only survived these transformations, but emerged stronger. Throughout the 20th century, various predictions suggested that other nations would overtake American economic dominance. In the 1980s, many economists predicted Japan would surpass the United States. More recently, projections suggested China would become the world's largest economy by the mid-2020s. Yet the United States has consistently defied these predictions, demonstrating that economic leadership involves more than just scale. It requires innovation, capacity, institutional quality, financial depth, and adaptability. The foundation of economic freedom. A central feature of American economic greatness lies in the economic freedom afforded to the private sector. The American system allows private businesses and individuals to make the majority of economic decisions regarding what to produce, how to produce it, and for whom to produce it. This fundamental characteristic distinguishes the American economy from more centrally planned or government-directed economic systems. This economic freedom is enhanced by relatively low levels of government regulation compared to other developed economies. A court system that generally protects property rights and enforces contracts. And a cultural emphasis on entrepreneurship and risk-taking. These factors combine to create an environment where businesses can form, grow, adapt, and sometimes fail with relative ease. The scale of American entrepreneurship is staggering. As of 2025, the United States is home to 36.2 million small businesses. During the pandemic period, from 2020 to 2021, the nation experienced a remarkable surge in new business formation, with new business applications jumping from 3.5 million in 2019 to 4.4 million in 2020 and 5.4 million in 2021. This entrepreneurial dynamism represents a fundamental strength of the American economic system. The United States also hosts 30% of the world's millionaires and 40% of the world's billionaires. Of the world's 500 largest companies, 139 are American. These statistics reflect not just the presence of wealthy individuals, but the capacity of the American economy to create, accumulate, and deploy capital at scale. Technological innovation and the digital economy. One of the most significant drivers of American economic dominance in the 21st century has been leadership in technological innovation. The technology sector has become a cornerstone of American economic power. The U.S. tech occupation workforce reached slightly over 5.9 million in 2024, with projections to reach approximately 6.1 million in 2025, when including tech industry employment. Net tech employment stood at approximately 9.6 million in 2024. The sector generates over $2.1 trillion annually in economic impact across roughly 700,000 tech business establishments. Technology and related sectors like scientific research, engineering, and consulting have made significantly larger contributions to productivity growth than other sectors in recent years. Labor productivity outside the farm sector has grown at an average rate of 2% annually over the past 5 years, compared to about 1.5% pre-pandemic. Much of this acceleration has been driven by higher services productivity, particularly in technology-intensive industries. The emergence of artificial intelligence represents the latest chapter in American technological leadership. Global IT spending is projected to grow by 9.3% in 2025, with data center and software segments expected to grow at double-digit rates. Worldwide spending on AI is anticipated to grow at a compound annual growth rate of 29% from 2024 to 2028. American companies dominate this space, with firms like Microsoft, Google, Meta, and OpenAI leading the development and deployment of AI technologies. This technological dominance extends beyond AI. American companies lead in cloud computing with Amazon Web Services, Microsoft Azure, and Google Cloud Platform commanding the majority of global cloud infrastructure spending. In social media and digital advertising, American platforms like Facebook, Instagram, YouTube, and Google control the majority of global market share. In operating systems, Windows and macOS dominate desktop computing, while iOS and Android both developed by American companies, control the mobile market. The tech sector's influence extends throughout the economy. In 2025, it is frequently said that every company is now a tech company. Businesses across every sector rely on IT and software solutions for automation, analytics, cybersecurity, and customer support. This means that American leadership in technology provides a multiplier effect, enhancing productivity and competitiveness across all industries. Financial market depth and the dollar's reserve status. American economic greatness is inseparable from the depth and sophistication of its financial markets. The United States hosts the world's largest and most liquid financial markets, providing a crucial mechanism for capital allocation and risk management. American stock markets have a combined market capitalization exceeding $50 trillion, representing more than 40% of global equity market capitalization. The bond market demonstrates even greater depth. The United States Treasury market, with over $28 trillion in outstanding securities, represents the largest and most liquid government bond market in the world. Every day, U.S. Treasury securities worth over $910 billion are traded. It's providing a benchmark for global interest rates and a safe haven for investors worldwide. This financial depth stems from and reinforces the role of the U.S. dollar as the world's primary reserve currency. As of 2025, approximately 58% of global foreign exchange reserves are held in U.S. dollars, far surpassing the euro at 20% and the Chinese renminbi at less than 3%. Combined, the U.S. dollar and euro account for nearly 77.45% of total foreign exchange reserves worldwide. The dollar's dominance extends well beyond reserve holdings. The dollar accounts for approximately 88% of all foreign exchange transactions globally. In international trade invoicing, the dollar represents about 54% of the total, meaning that even when two non-American countries trade with each other, they often conduct the transaction in dollars. A Colombian exporter might not want Korean won, and a Korean exporter does not want Colombian pesos, but both will accept U.S. dollars. This reserve currency status provides substantial economic advantages. It creates what economists call seigniorage, allowing the United States to borrow at lower interest rates than would otherwise be possible. Estimates suggest this advantage saves the United States approximately 60 basis points in interest costs, which at current debt levels translates to annual savings exceeding $200 billion. The dollar's dominance is supported by powerful network effects. People use the dollar because everyone else uses the dollar. These network effects help explain why dominant currencies persist long after the economic share of their home countries declines, a pattern observed historically with the British pound sterling, which remained a major reserve currency for decades after Britain's economic dominance faded. Despite periodic concerns about de-dollarization, the dollar's position remains remarkably stable. While the dollar's share of global reserves has gradually declined from peaks above 70% in the early 2000s to around 58% today, this decline has been gradual and does not represent a fundamental challenge to dollar dominance. Alternative currencies face significant obstacles. The euro, while substantial, is hindered by the fragmented nature of European fiscal policy. The Chinese renminbi faces restrictions on capital mobility and concerns about institutional transparency. No other currency combines the economic scale, institutional quality, financial market depth, and political stability that underpin the dollar's position. Sectoral diversity and economic resilience. American economic greatness is not concentrated in a single industry or sector. Instead, it reflects extraordinary diversity across multiple economic sectors, each contributing to overall economic strength while providing resilience against sector-specific shocks. The healthcare and social assistance sector is projected to be the fastest-growing major sector through 2033, expected to add 2.2 million jobs. The sector is driven by demographic trends, particularly the aging population, and the increasing prevalence of chronic conditions. Healthcare profit pools are expected to jump from $605 billion in 2022 to $837 billion by 2027, representing a 6.7% compound annual growth rate. Innovation in telemedicine, AI diagnostics, and personalized medicine is transforming healthcare delivery while creating enormous economic value. Manufacturing remains a cornerstone of the American economy, with approximately 600,000 businesses employing around 12 million individuals and generating more than $4.3 trillion annually. Key industries include automotive, aerospace, electronics, and machinery manufacturing. Despite decades of predictions about manufacturing decline, the sector has adapted through automation, advanced materials, and high-value production. The financial services sector encompasses banking, insurance, and investment services across about 600,000 businesses. This sector not only serves domestic needs, but positions America as the global financial hub, facilitating international capital flows and providing sophisticated financial services worldwide. The construction industry comprises about 700,000 businesses employing approximately 7.5 million people and generating around $1.3 trillion annually. Current growth is being driven by infrastructure renewal, renewable energy installations, and residential construction responding to demographic pressures. The retail and e-commerce sectors demonstrate how traditional industries transform in the digital age. While traditional retail faces challenges, e-commerce continues its explosive growth. Online retail has permanently altered consumer behavior, with convenience, mobile shopping, and AI integration driving continued expansion. American companies like Amazon have pioneered this transformation, creating entirely new categories of economic activity. The energy sector, comprising about 300,000 businesses employing approximately 6.7 million individuals, generates over $1 trillion annually. This sector is undergoing a historic transformation as renewable energy sources expand rapidly. The clean energy sector is growing despite political debates around sustainability. Driven both by environmental concerns and falling production costs, renewable energy production costs continue to decline while consumer demand for eco-friendly options rises. Leisure and hospitality, while disrupted by the pandemic, are rebounding strongly. Hotel bookings are approaching pre-pandemic levels, and younger travelers are driving new waves of domestic tourism. This sector's recovery demonstrates the resilience of consumer-facing industries and American spending capacity. Human capital and immigration. Economic greatness ultimately depends on human capital, the skills, knowledge, and creativity of people. America has historically benefited from being a magnet for global talent. The country's system of higher education, with institutions like Harvard, MIT, Stanford, and hundreds of other universities, produces and attracts top talent from around the world. The United States hosts more international students than any other country. With over 1 million foreign students studying at American universities in recent years, many of these students remain in America after graduation, founding companies, conducting research, and contributing to economic dynamism. Studies indicate that immigrants are nearly twice as likely to start businesses as native-born Americans, reflecting a selection effect where entrepreneurial individuals are more likely to migrate. However, immigration policy has become increasingly contentious, and recent policy changes have impacted labor force growth projections. In 2025, the United States labor market experienced notable shifts characterized by increased layoffs, with companies announcing approximately 950,000 job cuts between January and September. The technology, retail, and government sectors accounted for the largest share of these reductions. Labor force growth as contribution to potential GDP is forecast to average about 0.3 percentage points over the next few years, lower than in recent decades. This demographic challenge, combined with an aging population, presents a significant headwind to economic growth. Previous waves of immigration have supported labor force growth in subsequent years, helping offset the effects of lower birth rates. but restrictive immigration policies could undermine this demographic support. Despite these challenges, the American labor market remains dynamic. The unemployment rate rose to 4.6% in November 2025 from historic lows, though it improved to 4.4% in December 2025. These levels remain healthy by historical standards. Job creation, though slowing, continues across most sectors. Consumer power and domestic demand. A distinctive feature of the American economy is the power of its consumer sector. Personal consumption represents approximately 70% of GDP, a higher share than in most other major economies. This means that domestic demand, rather than export dependence, drives American economic growth. This provides substantial insulation from global economic shocks and trade disruptions. American consumer spending power reflects several factors. Median household income, while facing challenges from inflation, remains among the highest globally. The wealth effect from asset ownership, particularly home equity and stock holdings, supports spending capacity for many households. Credit availability, facilitated by sophisticated financial markets, enables consumption smoothing over time. In the third quarter of 2025, consumer spending demonstrated remarkable resilience. Non-durable goods outlays grew by 3.9%, driven by stronger spending on clothing and moderate outlays on groceries and gasoline. Durable goods outlays rose 1.6% as spending on recreational goods surged. Services outlays rose 3.7%, boosted by spending on healthcare and recreation. However, this consumer strength masks growing inequality. Consumer spending has become increasingly bifurcated with high-income households, driving much of the growth, while lower-income families remain under pressure due to higher prices and slower wage growth. This two-track recovery has important implications for economic sustainability and social cohesion, investment, and capital formation. American economic dominance is sustained by extraordinarily high levels of investment and capital formation. Business investment, particularly in technology and innovation, continues at impressive levels. The capital expenditure outlook remains strong, particularly in artificial intelligence infrastructure. Business investment grew at a moderate 2.8% in the third quarter of 2025, with equipment investment growing 5.4%, driven by strong outlays on information processing equipment. Investment in intellectual property products increased 5.4%, reflecting continued innovation spending. Companies are pouring hundreds of billions of dollars into AI infrastructure, data centers, cloud computing capacity, and software development. While some analysts question whether returns will justify these massive investments, the scale of capital commitment demonstrates confidence in technology-driven productivity gains. Beyond technology, investment continues across multiple sectors. The construction industry is investing in renewable energy installations and infrastructure upgrades. Manufacturing firms are investing in automation and advanced production technologies. Healthcare organizations are investing in new treatment modalities and diagnostic technologies. This investment culture reflects several factors. American financial markets efficiently channel savings to productive investments. The venture capital industry, centered in Silicon Valley but extending nationwide, provides risk capital for innovative startups. Private equity provides capital for corporate transformation and growth. Public equity markets allow successful companies to access massive amounts of capital for expansion. Economic challenges and vulnerabilities. Acknowledging American economic greatness requires also recognizing significant challenges and vulnerabilities. The national debt has grown to concerning levels, exceeding 120% of GDP. Debt held by the public has risen throughout the 21st century, from 31% in 2002, 52% in 2009, reaching 77% in 2017, and exceeding 120% in 2024. The United States now ranks 43rd highest in debt among 207 countries. The interest burden on this debt has become substantial. Interest payments reached approximately $579 billion in April 2025, representing 18.4% of government revenue. Projections indicate interest payments will total nearly $1 trillion by the end of 2025 and double to $2 trillion within a decade if current trends continue. This creates a significant fiscal challenge, potentially crowding out other government spending and constraining policy flexibility. Income inequality has risen significantly over recent decades. Real wages for most workers and median incomes have either declined or remained stagnant over the past 20 to 40 years. In 1970, wages represented more than 51% of GDP and profits were less than 5%. By 2013, wages had fallen to 44% of the economy, while profits had more than doubled to 11%. This shift has created social tensions and political polarization that could undermine economic dynamism. The housing crisis presents another significant challenge. As of January 2024, in roughly half of cities in the United States, workers need incomes of $100,000 or more to purchase a home, the result of rising housing prices and interest rate hikes. This affordability crisis affects family formation, mobility, and economic opportunity, particularly for younger generations. Infrastructure has deteriorated in many areas, with aging roads, bridges, water systems, and electrical grids requiring massive investment. While recent infrastructure legislation has begun to address these needs, the scale of required investment is enormous and will take decades to complete. Climate change poses both immediate and long-term economic risks. Extreme weather events are becoming more frequent and severe, causing billions of dollars in damages annually. The transition to a lower carbon economy requires massive investments while potentially disrupting existing industries and employment. Global economic leadership and geopolitical implications. American economic greatness extends beyond domestic prosperity to include global economic leadership. The United States plays a central role in international economic institutions, including the International Monetary Fund, the World Bank, and the World Trade Organization. These institutions, largely designed by American policymakers after World War II, have shaped the architecture of global economic cooperation. This economic power translates into geopolitical influence. Economic sanctions imposed by the United States can have devastating effects on target countries due to dollar dominance and the role of American financial institutions in global transactions. The ability to exclude nations or entities from dollar-based financial systems gives America substantial coercive power. However, this use of economic power as a geopolitical weapon has sparked concerns among other nations. Some countries are attempting to reduce their dependence on dollar-based systems, developing alternative payment mechanisms and increasing bilateral trade in local currencies. China, for example, has established its own alternatives to the SWIFT international payment system. The economic relationship between the United States and China represents perhaps the most important bilateral economic relationship in the world. China's rise to become the world's second-largest economy has created both opportunities and tensions. Trade between the two nations exceeds $700 billion annually, creating deep interdependence. Yet competition in technology, concerns about intellectual property, and geopolitical rivalry have led to increasing friction, manifested in tariffs, investment restrictions, and technology export controls. Innovation ecosystems and the knowledge economy, a critical but often underappreciated source of American economic strength, lies in its innovation ecosystems. These ecosystems, particularly prominent in areas like Silicon Valley, Boston, Seattle, Austin, and other technology hubs, combine universities, research institutions, venture capital, entrepreneurial talent, establish corporations in ways that generate continuous innovation. Silicon Valley exemplifies this ecosystem dynamic. Stanford University and the University of California system produce world-class engineering and computer science talent. Venture capital firms concentrated in the region provide early-stage funding for innovative startups. Successful entrepreneurs who have built and sold companies often become angel investors and mentors for the next generation. Large technology companies like Apple, Google, and Meta attract global talent and provide training grounds where employees learn cutting-edge technologies before often starting their own companies. This ecosystem effect creates increasing returns to scale. The concentration of talent attracts more talent. The availability of capital attracts more entrepreneurs. Success breeds more success as experienced founders and executives share knowledge and resources with newcomers. These agglomeration effects have proven remarkably difficult for other regions to replicate. Despite substantial efforts and investments, the research enterprise further strengthens American innovation capacity. The United States invests more in research and development than any other nation, exceeding $700 billion annually. This includes government funding through agencies like the National Institutes of Health, the National Science Foundation, and the Department of Defense, as well as substantial private sector R&D spending. From its emergence as an independent nation, the United States has encouraged science and innovation through policies like patent protection, government-funded research, and land-grant universities. This historical commitment to scientific advancement and technological innovation has created institutional strengths and cultural attitudes that continue to drive economic dynamism, future prospects, and ongoing transformation. Looking forward, American economic greatness faces both opportunities and challenges. Goldman Sachs research projects U.S. economy-wide productivity growth to average about 1.7% through 2029 and 1.9% in the early 2030s. Together with forecasts for labor force growth, potential GDP growth will likely average about 2.1% in 2025 to 2029 before accelerating to 2.3% in the early 2030s. The artificial intelligence revolution represents the most significant technological opportunity. If AI adoption accelerates and delivers on its promise, productivity growth could surge substantially above these forecasts. AI could automate knowledge work, enhance decision-making, accelerate scientific discovery, and improve efficiency across virtually all economic sectors. Some economists suggest that breakthrough advances toward artificial general intelligence could lead to productivity growth that makes much human labor in knowledge-based tasks obsolete, though such scenarios remain speculative. The energy transition presents both challenges and opportunities. Moving to renewable energy requires massive investment in solar, wind, battery storage, and transmission infrastructure. This creates enormous economic activity while addressing climate risks. American technological leadership in areas like battery technology, solar manufacturing, and electric vehicles could position the nation to capture substantial economic benefits from this global transition. Biotechnology and personalized medicine represent another frontier. Advances in genomics, gene editing, immunotherapy, and regenerative medicine could revolutionize healthcare while creating substantial economic value. American leadership in biomedical research and pharmaceutical development positions the nation well to capitalize on these advances. However, significant risks remain. The main downside risks include slower than expected AI benefits, more abrupt slowing of population growth, trade conflicts that disrupt global supply chains, fiscal crisis triggered by unsustainable debt levels, or political dysfunction that undermines institutional quality. The recent labor market shift characterized by stagnant hiring and increased layoffs, alongside elevated inflation and higher borrowing costs, signals potential near-term challenges. Conclusion: the meaning of economic greatness. Why is America great? When viewed through the lens of economic scale, the answer lies not just in the impressive statistics, the $30 trillion GDP, or the position atop global economic rankings. American economic greatness emerges from a complex system of institutions, incentives, culture, and capabilities that have proven remarkably durable and adaptable across more than a century. the economic freedom that allows individuals and businesses to pursue opportunities, the financial depth that efficiently allocates capital, the technological innovation that continuously transforms production possibilities, the consumer power that drives domestic demand, the educational system that develops human capital, the research enterprise that pushes the frontiers of knowledge, and the entrepreneurial culture that celebrates risk-taking and tolerates failure. These elements combine to create an economic system of extraordinary dynamism and resilience. This economic power has profound global implications. American economic leadership has underwritten much of the global economic order since 1945. The dollar's reserve currency status facilitates international trade and investment. American financial markets provide capital for projects worldwide. American technological innovations diffuse globally, raising productivity and living standards far beyond American borders. American consumer demand supports employment and growth in exporting nations around the world. Yet this economic greatness should not breed complacency. Significant challenges threaten continued prosperity, from unsustainable debt levels and rising inequality to climate change and geopolitical tensions. Other nations are investing heavily in education, technology, and infrastructure, attempting to close the gap with American capabilities. China's rapid development, European integration, and innovations emerging from smaller nations worldwide all present competitive challenges. Sustaining American economic leadership will require addressing these challenges through continued investment in education and research, infrastructure renewal, fiscal sustainability, policies that broaden prosperity beyond narrow income bands, and maintenance of the institutional quality that underpins economic dynamism. It will require the same adaptability and innovation that has characterized American economic development throughout its history. The greatness of the American economy, ultimately, lies not in superiority over other nations, but in the demonstration that certain institutions, policies, and cultural attributes can generate sustained prosperity and innovation. The American experience suggests that economic freedom, coupled with strong institutions, investment in human capital, commitment to innovation, and openness to global engagement can create enormous economic value and rising living standards. As the world continues to evolve, with new technologies emerging, demographic patterns shifting, and geopolitical alignments changing, the question is not whether America will remain economically great, but rather whether it will adapt successfully to new challenges while maintaining the core attributes that have made its economy the world's largest and most dynamic. The answer to that question will shape not just American prosperity, but the trajectory of the global economy for decades to come.